Hello, friends, and welcome back to this stunning Wednesday on crypto. My God, Bitcoin touched like $108,000. That's like fucking insane. Anyway, there's a lot of things just lining up in bullish territory. Let's dive right in. Hold pain. Now, all of this Bitcoin buying appetite, it's just picking up. It's looking relentless. It's looking nonstop. And of course, we now have the first state to get into the reserves conversation. Let's keep in mind, this all started with nations like El Salvador and like Bhutan beginning to accumulate Bitcoin. That's bled into the zeitgeist of the US, especially with the administration being a lot more lenient towards these digital assets. I mean, again, we had Jerome Powell of the Fed talking about how Bitcoin is becoming more acceptable and how they're going to de-risk associating with cryptocurrencies, especially for banks that can then open up bank accounts, fund them, and start that flywheel effect. Now, we've gone from nations onto treasury companies with the micro strategy, and of course, we now have states. So Texas has gone ahead and signed Senate Bill 21 into effect, which means that they can go out, capture any sort of Bitcoin that's been used for illicit purposes, and build their own reserve. Now, just like everything going on in El Salvador, it's going to be really a proof of concept. Other states will be likely to compete, will want to get in on the game, but again, this is yet another domino in that race to accumulating Bitcoin. And with a finite supply, I mean, the price is only going to keep going up. The longer people wait, the more they are going to feel unexposed, so on and so forth. The flywheel continues. So this is pretty wild. It has passed. Of course, it's going on for final signature, but Abbott has signaled that he wants this and he wants it aggressively. So, with New York going a little bit more socialist in the mayoral campaign and all of the Bitcoin mining activity going on in Texas, I mean, will we see Texas rise as a major hub for Bitcoin? And of course, let's keep in mind, Bitcoin and crypto are widely separated now. We are seeing them as two different assets inside the broader asset class. But we see this buy appetite just continue. Look, this is Anthony Pompliano. I find him rather obnoxious, but he is deeply entrenched in traditional finance and raising over $1 billion for a new company to go and buy Bitcoin and put it in reserves. And well, he did compile this very nice chart that just shows the aggressive, relentless Bitcoin buying coming from a lot of these treasury companies. Now, how does this unwind if Bitcoin inverts? I mean, that's really hard to tell, but as long as their appetite to buy and hold lasts for, 5 years, definitely a decade, then like this asset has proven to only go up. And as of today, I mean, hitting all-time highs, anyone that bought Bitcoin is in the profit. So that's a pretty strong advertising campaign. And we're just going to see that the Fed is going to continue to print money. It looks like the money printing will be relentless, never ending. And that only puts more arrows into the Bitcoin quiver of attractiveness. So this is absolutely insane. Just to look at who's holding Bitcoin, I mean, how much they have, and where are they buying it from, right? If there's only so many Bitcoin, that means people have to be selling it. So this is all very, very bullish on the Bitcoin price. Now, one interesting thing coming out is that Kwon is actually going on trial. Everybody might remember him from the Terra Luna debacle. Basically, Terra was a stablecoin in the DeFi ecosystem. It was largely propped up through a lot of BS and collusion with Sam Bankman-Fried, and it depegged aggressively, taking a lot of value with it, throwing the entire industry into its bear market at the end of 2022, I think. But it is far out to see his legal defense taking these updates into account, saying, hey, the Genius Act and the Clarity Act, they're both passing Congress and they're dictating that stablecoins and crypto tokens are the same. Is this getting him out of the securities fraud violations? Now, regardless of doing securities fraud or not, I think he deserves everything that he can get. There was a flaw in the code. It was exploited. It really does seem like it came from somebody on the inside. This all happened during a migration from 2-pool to 3-pool, the pools being the AMMs, the automated market makers, and the liquidity that backed the entire asset. So when they moved this asset pool, which was supposed to be an upgrade to the system, an exploit was available and somebody took advantage of it in a split second. This means that they were watching it, they were clearly aware. And the reality is Kwon was likely aware of this as well. And this is, he's just a criminal. There's no real way to wrap this around it. But it is interesting to see this happening. And of course, people that have followed me before know that Roman Storm, the developer of Tornado Cash, is still fighting a battle in favor of freedom of speech, saying that he coded what is known as an Ethereum mixing platform, but he has no oversight over it, no control. So that's going to be something we're going to follow very closely. And of course, all of this sort of overlaps to some degree. Now, just in continuing to watch the mass adoption as it begins to unfold, 8 major South Korean banks, along with Open Blockchain, DID Association, and Financial Settlement Institute, form a joint venture to launch a Won-based stablecoin. Now, for anyone new to crypto, I mean, the kimchi premium has been around for a long time. This was the fact that Bitcoin has traditionally traded higher in Korea. That's because you have a very highly educated class with a decent amount of revenue. They all work very diligently. They earn a lot of capital, and they like to invest, and they like to gamble, and they like to speculate. So having South Korea come in with a won-based stablecoin, this is all pretty nuts, and a further display of the adoption of blockchain. Let's be honest, stablecoins are not cryptocurrencies. They're not cryptographically secured self-custody assets. They are indeed just a metadata stamp on the blockchain of another asset. So this is pretty interesting. The more that pop up from both from the US, from Korea, I mean, this goes against the IBS, the International Bank Settlement Platform, which came out yesterday and was sort of naysaying stablecoins. But obviously, it's competing with their bottom line, and it just keeps going. Right now that we have the specter of Gary Gensler just gone and disappearing from the oversight and the regulatory enforcement that was going on. Right, the SEC under the last admin was like a financial Gestapo, and now the SEC is free to consider how this technology can legitimately be integrated into society, into the way we treat our investments, into the way we interact with financial items. And this is pretty cool that the Crypto Task Force met with the New York Stock Exchange to talk about equities on chain. Look, it's very obvious. The New York Stock Exchange, NASDAQ, they have business hours, and they're competing with this whole new trading platform, blockchain, that's on 24/7, 365. And it's cheaper, and it's faster, and it has instant finality. And this is all going to be very competitive to the stock market. So it's obvious that we're going to see equities trading on chain. And I just have to reinforce, equities on chain are not the same thing as cryptographic assets. Equities sit inside an issuer. They are basically like a stablecoin, a metadata stamp representing an asset held elsewhere. So an issuer will always be able to claw back a digital RWA, an equity on chain. Let's say they just don't like the way it's performing, or they want to move it from one chain to another, or they want to geofence. Like, for example, North Korea gets their hand on a bunch of securities representing American companies. They can just kibosh those tokens and say these no longer represent the actual underlying equity. So this is all fascinating. And what it really does signal, what it does portend, is that products like Coinbase, like Robinhood, are going to be major competitors to the giant TradFi established entities, which would be, Vanguard, the banks, etc. We are going to be through apps, through wallets. I mean, Stripe acquiring Privy, this is so fundamental to it, because Privy is actually like the wallet provider for a lot of things, like Hyperliquid, for example, a DEX. And if we can get on-chain equities to have a rule set, then shit, you're going to see an explosion of these apps with like beautiful UIs want to settle securities transactions on chain. I talked about this in the Robinhood potentially launching an L2, charging 0 fees, because if they get your trading data, they can just sell that to Jane Street. And really, that data is a higher revenue gross than the transaction fees on an L2. So we're going to see a lot of disruption. And I don't know, what do we call it? FinTech, traditional finance, obviously blockchain. These are all going to become very, very blurry terms as we just move towards the internet of value. And last but not least, I'm fucking here for this. Adam Schiff, who does kind of rub me the wrong way a lot of times, but he introduces the Coin Act to address Trump's crypto ties. It's a bill that aims to prevent financial exploitation of digital assets from public officials, including the president and the first family. I really do think, as much as I love President Trump for eliminating Gary Gensler's SEC, again, that Gestapo of the financial world, he is putting our industry in a very negative branding conundrum, which is that the majority of retail sees crypto, hears crypto, and they associate it with the Trump grift. I've talked about it a lot. And to be frank, I mean, Trump, good for him. He's taking advantage of an opportunity that is not yet illegal. Gary Gensler made it clear that we couldn't set up these kind of rules to prevent a president or somebody in power from doing this. It's because of the previous SEC that we don't actually have good rules and regulations around what you can and cannot do. So this is open season for Trump. He is not the kind of man, to sell a bad steak if there's a buyer on the other side, to sell a false university degree. Like, he will take advantage of every opportunity, and more power to him, because the Dems, as much as they complain, actually set up the opportunity for him him to do just that. And that's a little bit frustrating, but the more the zeitgeist aligns crypto with the Trump grift, with the GOP, I mean, the more we open ourselves to opportunity for a backlash when the powers ultimately change. And let's be real, NYSE just sent a very loud message that the current system, especially under the Democrats, just isn't working. I mean, Joe Biden was exemplar of that. And like, did people really want Trump? I don't know. I don't really think so. But the alternatives were awful. And the millennials are voting en masse. They are coming out in numbers. And New York, again, was a loud, loud drumbeat to the fact that we will vote for things that might not even be in our best interest just because the other options are so goddamn bad. So anyway, I do think it would be worthwhile to establish that people in power cannot use blockchain as this exploitation as this grifting tool, because it is very easy to set up one of these products and just say, hey, funnel money to me through this thing. You can just buy a bunch of tokens. I have a bunch of tokens, so I'll sell them on the other side. Cash moves from person A to person B. Very clear. Anyway, all of this is healthy for our industry. We want to see the growth and we want to see the development. The technology is moving forward and it's in an amazing place. It's currently better than it needs to be for a lot of the use cases that we want to see from it. What's actually holding it back is the regulations, is the fear of the previous SEC, but that is shedding. Real rules and regulations are taking shape. And again, my hopes are that the coming 5 years, the coming decade will actually be a complete inversion of the way we currently interact with our money, with our value sets. We will be able to earn value from our communities, whether that be video games, whether that be content creation, whether that be investing in portfolio companies, or just day trading and sports betting. All of it is going to become a very blurry merge in the same way we treat data on the internet today. So is that going to be good? Is it going to be bad? I'm not here to say it. I think it's very natural. I think the digitization of anything that can be digitized is going to happen. It's very obvious that we're building a parallel reality, if you want to call that the metaverse, if you just want to call it AI, but there will be a digital analog to the real world. Our value has no reason to sit in the real world. I mean, unless you're a gold bug, I'd rather that number, which is to me, even in a bank, is represented digitally on an app. So we are moving towards the blockchain world. It is so fucking obvious. And we'll probably stop talking about it at some point. Businesses will just be built with these functions as a base level utility. But of course, to get to that point, we need the regulations to approve the businesses to do that, because no business is going to take a risk that could cause them full financial collapse. That is what happened under Gensler, and that is what put the fear of God into anyone. Now we're seeing Stripe adopt Privy, the stablecoin wallet provider, and we will likely see that final endpoint that I've talked about, tap to pay, coming from Stripe. So we're basically full circle on mass adoption. People are going to use it without knowing that they're going to use it. And all of these little bits and pieces are a step forward. Bitcoin as a monetary asset is being adopted by nations, by states, by companies, by new treasury things that are just like popping up out of the woodwork. Meanwhile, Ethereum, Solana, they're all pushing forward on these global computers, and they are just getting better and better and better. Stable coins are seeing a mass adoption in their own right. And that's pretty clear, because like, why not have a digital dollar that can move anywhere 24/7, 365 for like basically zero fees? So all of this is just the beginning. Then we have a generation that grows up with this technology, that intuits it and can start to blend it into applications that are so weird and far out that we just never thought money could do it. That's where we start to get really exciting. Hopefully venture capital will start to lean more into applications. I can't go without saying that the industry is beginning to self-regulate itself to say, hey, we want tokens listed with transparency. We want to know where these assets sit. We want to know how many tokens are in investor hands waiting to dump and things like that. All of this lines up for, again, a long tail positive for the cryptocurrency, the blockchain space, maybe a lot of short-term volatility because there is tons of bullshit and tons of very depressing nihilism inside the sector. And of course, the Trump grift is never positive. However, that being said, I remain extremely bullish. I hope that my excitement translates to y'all. If you could post something in the comments, I mean, just let me know. I want to hear from you. This is what I do it. I'm talking right now so that we can have this two-way communication street. With that being said, stay as always. I'll see you tomorrow.